Hello, everyone, and welcome to today's class. I know this is our very first class of the Host Shutter Fest going on this week, but it's the best class you can take because we're going to get it over with, and then we're going to have fun, and we're going to really concentrate on the craft that you have. I'm going to go ahead and close the door to... So like I said, this is a topic that I know we are very much into our craft. I have my craft of tax. You have your amazing craft, the creative part of capturing amazing moments. But I think with every business, no matter what you do, it always comes with the business side. We're running a business no matter what we're doing, and we always need to make sure that we are being responsible for our fiscal responsibilities, which is taxes. But this class is made for you so that you are able to at least understand how the tax code works and how we should not be intimidated by it, but instead really try to learn it and strategize with it. With that, I would love to introduce myself. My name is Nadia Rodriguez. I have been a CPA for over 15 years. I am in the city of Dallas, Texas, and I have been running my practice where I focus mainly on tax advisory. Yes, I prepare the returns for my clients, but we meet during the year, especially those business owners, because once you end the year, it's could've, would've, should've. There's not much we can do for them to strategize and help them save on those taxes. And the worst thing is that they have this huge tax bill at the end, which surprises them, especially if you've been working under an employer that withholds taxes from you, and then you start running your own business. There's nobody there to withhold taxes. And that's the biggest surprise that comes to business owners. So with my firm, we practice more on helping throughout the year. Touch points, once a quarter, once every 6 months. We make sure that we are at least getting you familiar, the client, with what your tax situation is and how we can reduce those taxes coming forward. I took the leap on going full-time with my practice in September of last year. I was working under a corporate also attorney, and I practice a lot of tax returns, but on the side, I still had my own tax practice. Finally took the leap into doing my own business, and it has been an adventure. It's very different when you don't have that steady paycheck anymore. But it all is about getting in touch with your own financial numbers and learning them and getting familiar on how we can strategize towards them. Now that's what I do 9 to 5, Monday through Friday, some Saturdays too. But in the evenings, and even on the weekends, I do get pulled into the family business. I am married to a wedding photographer, a quinceañera photographer, so I understand that what goes behind the scenes of capturing the most special day of somebody's life. The stress that goes behind the scenes, but I was not gonna say dragged into it, but influenced and very highly encouraged into coming along and just pressing record is what they told me. At the end, I really am doing more than just hitting record. This is in Dallas. You need some physical strength for sure. The equipment is really heavy, is what I didn't know before I got pulled into this. And this day was one of the most windiest days in Dallas. And at this point, I can just tell you that it was always one more shot. And that is not true. It is never just one more shot. But that is my contribution to the family photography business. With that, of course, I have to say in disclaimer, it's going to be a lot of information within about an hour. Of course, I can't cover every scenario, but I am going to do my best to try to help you understand the world of taxes. Every situation is different until you get into in tune with a tax CPA, a tax advisor, is when you can get that really one-on-one tax situation analysis for yourself. So it's more of an educational session today. What we're going to go over is just really establishing your business. Does anybody run their business as a side hustle here? We all start as side hustles, right? But we need to make sure that we're very careful on defining our side hustle, that it is a business. Because you know what the IRS says, they want to come in and say it's a hobby, especially in creative world like photography, videography. And why do they want to define it as a hobby? Because they won't allow you to take any expenses for your income. And so we want to make sure that we are protecting ourselves, that it is not a hobby, it's a real business that we're running. And so that's how I'm going to talk about how can we establish that business. How do you set aside money for taxes? How much should you set aside? I think that's the biggest question. Where am I in my tax bracket? And the money that comes in, is it all mine? How much is it for the government? Tax strategies for photographers. So once we understand the world of taxes, what types of taxes do we have to pay? Okay, how can we strategize to help you reduce that tax bill to the IRS? And instead of sending a check into the IRS, sending a check into your retirement account. Set money somewhere for yourself instead of the government. And then we're going to go through true or false, busting those common tax myths. Now with TikTok and social media, I've seen a lot of videos come through, and clients have forwarded me a lot. So I'm going to go through some of the most common that I've seen out there, if they're true or if they're false. And of course, we're going to leave time for Q&A. So if you have any questions, bring them on. We're going to get our tax topics out of the way before we start really enjoying Shutterfest. So taxes do not have to control you. You can learn to use them strategically. Because one thing is certain is that, what is two things that are very certain in life? Death and taxes. So there is no escape. So how can we really embrace it and accept it and work with them? First, let's talk about the type of taxes that we have to pay. There could be up to 4 types of taxes. Those of you that live in those states that do have a state income tax, Texas doesn't. We don't have a state income tax, but I know California has one of the highest state income taxes, a 13.3%. They're still broke. I know Ohio, you have the state income tax and you have city taxes as well. So yes, there's a lot of taxes in there. If we start off with our federal income tax, it goes from the lowest tax bracket of 10% all the way up to 37%. Now, we're not on a flat tax rate, which means we get taxed at layers. Our first $11,000 of income gets taxed at 10%. The next $40,000 gets taxed at 12%, and then 15%. We start gradually going up until the highest hits us at 37%. State income tax, like I said, that's another tax that we have to pay on our income. Goes from 0%, which is the states like Texas, Nevada, Florida, no state income tax there, up to 13.3 in California. We had a lot of migration in Texas during the COVID years from California, escaping those state income taxes. I don't blame them. And then we have Social Security tax and Medicare tax. Now, these are pretty high numbers. These we do have to pay on the income that we're earning. It's a 12.4% Social Security tax, which it's supposed to fund our Social Security funds so that when we are at that age to collect them, we get paid on what we have contributed throughout the year. Medicare tax, 2.9%, the same thing. The concept is that it's funding our Medicare so that when we get to that age, we can start collecting from it. The bottom two, they add up to 15.3% of tax. That's also called self-employment tax. So when we are self-employed, that we are our own boss, we are not working for someone, we have to come up with 15.3% of tax to pay the government, which really they're saying it's to fund our own Social Security and our own Medicare fund. If you do work for an employer, they help you pay half of that. And that is called payroll tax for them. They can deduct that tax, but they're helping you pay that bill by half. So just know that not all of your revenue gets taxed, it's only the profit. And so that's where the strategies come in. How can we lower that revenue to not pay all of this entire tax on all of our revenue? We're going to start off with just a scenario. We have Sam. He works a 9 to 5, and he does have a side hustle where he starts learning photography, gets interested in photography, works nights and weekends, and he starts doing portraits in small sessions. He buys his first camera. I think that's where everyone starts, right? Let's start buying the camera to capture those moments. And he begins earning side income, maybe working for someone as a second shooter or for himself. But he does want to turn this passion into profit. And that's where we need to make sure that we are establishing a business and it's not considered a hobby by the IRS. Because a business, we are operating it with a profit motive. If we ever get audited, we're not going to tell the IRS agent auditor that we are running this because we love photography. Yes, we love it, but we are in it to make a profit. A hobby is one that we are saying we do it for pleasure and recreation, which is amazing. If you're doing what you love and you're getting paid for it, that is the best scenario. But hobby losses, when it comes to the tax law, hobby losses disappear. They can't offset any type of income, and the expenses that you are paying to generate that profit, you cannot deduct them because it's a hobby. One of the biggest things is if you start generating losses year after year, and it's very understandable. The very first year, you're all in. You're investing all of your money to buy your gear. You're going to have a loss most likely. But if you have a loss again the second and the third year, that is when the IRS starts taking a closer look, because they want to come in and say that is really a hobby. Who else, what other business owner would keep running their business with a loss? It's not impossible, but as long as we have our scenarios and our research and our records on point, where we are showing that we have marketing in place, we have social media, we have established pricings, we have bookkeeping, we have separate bank accounts. We are really saying we're running this like a business owner. So again, it's just one of those defenses that you always want to make sure that you know your mindset. Photography is amazing, but run it like a business. Have your social media on point. You're attending Shutterfest. A business owner is going to come invest in a Shutterfest conference to perfect their craft. That is a business owner. Now, when it comes to business deductions, the law says a business deduction is only allowed if it's ordinary, necessary, and reasonable. Ordinary is a common accepted line in your line of work. A camera, of course, it's ordinary for you to have a camera. Is it necessary? Most definitely. You need a camera to conduct your work. Now, is it reasonable? I know those prices are not very reasonable to us, right? They're pretty expensive, but that's the common practice. You're not going to find cameras, really good cameras or gear that is very economical. As long as you're not going to buy a gold finished camera, now that might not be reasonable. You can still do your job with a regular camera and not with one that's gold plated. We just need to make sure that we are investing our funds into something that's going to make us more money. Trust me, I am the bank at home. I have to approve some of these and it hurts, but we know that the most common photographer expenses, right? The most obvious, your gear, your equipment, software subscriptions. But don't forget about these. Your mileage and your travel, which we're going to go over the rules for that. Your home office. We're going to establish what the IRS defines as a home office. Of course, your insurance, you're paying your contractors, studio supplies, props, client gallery, CRM tools. All of these are expenses necessary to run your business. But the best tax deduction is the one that you can prove, because the burden of proof falls on you. I've been through IRS audits, and if we don't have a receipt for a $5 expense, we get disallowed that expense. So please keep your receipts, scan them. I got coffee right now, and I had them email it to me, the receipt. Most of the time they'll ask you, do you want to keep it? Do you want a receipt? If it's a personal expense, I don't want to waste paper. I say no. Now I've completely changed my mind and said, yes, I need a receipt for everything. So do know, I was recently at an audit with a client and they spent $1,000 on equipment. We couldn't find a receipt. The vendor had closed their doors because the audits don't happen the year after. Audits will happen up to 3 years after. I forget what I ate for dinner last night. So it's really important that you keep those receipts. And we're going to talk about, if you have kids, put those kids to work for them to scan the receipts for you, because that's a tax strategy. So how much do you set aside for taxes? In a perfect world, you know exactly how much to set aside, or you're working with a professional that's helping you determine that estimated amount. What I tell my clients, if we're not going to work together during the year, at least set aside the amounts right here, 27%, 37%, 39%, at least those amounts. Now, if you're not saving any of that, it's going to be hard at the end when we're filing your return. but because we're going to have to come up with a lot of money when it comes to tax time. And one of the things that the IRS doesn't like is to be paid on time. They penalize you and they charge you interest at an 8% right now. So make sure that you're saving at least these amounts depending on your tax bracket. If you're not familiar what your tax bracket is, I advise that either you ask if you're working with someone, a professional that filed your return, or if you're doing it on your own, look through your tax return and see if you can determine what your tax bracket is. But we know that we at least need to save that 15% of self-employment tax because no one is helping us withhold any of those taxes, Social Security and Medicare tax. And then from there, we add up our federal income tax bracket. So these are the last ones that I really want you to start saving onto the side. And remember, it's your profit. Take that revenue that you're bringing in, minus all of those business expenses, your CRM tools, your if you bought some new equipment, your software subscriptions, anything left over, set that money aside. So Sam, if we go back to Sam's example, during his first year, he earned $100,000 from photography and revenue. After his business expenses, his common expenses was $5,000, he profits $95,000. If we are telling him to save some money on the side, he's going to have to save $33,150 just to be on the safe side so that we pay the tax. Now, how can we lower that amount for Sam? We're going to go over some tax strategies. But do know that you do have to pay taxes quarterly because nobody is withholding from you. And the IRS wants you to pay every quarter an estimated amount. If you don't do that, you get penalized for not paying your fair share throughout the year. Because they're trying to make this a little bit more fair for everyone, those that are employees, that they get withheld on their paycheck, and those that are working for themselves, they have to also contribute during the year. So definitely pay your taxes every quarter if you can. April 15 is coming up. That's your very first quarter in 2026 for you to send your first payment for this year, whatever revenue you have from January until March 31st of this year.
Never look weird, the fact, like, usually for me, I don't do anything between like now and.
Oh.
For me, it'd be like a big fat goose egg.
Correct. So if you don't make any income, it's a slow period, right? It's maybe not wedding season, not any jobs came in. You don't have to send anything in. It's only when you are making that profit. At the end, if somebody's helping you prepare your return or if you're doing it on your own, there's a way that we annualize it where we say, hey, we owe at the end maybe $10,000, but that $10,000 all came through at the very last quarter of the year. And you don't get penalized for not sending in because there was nothing. You didn't earn anything for the first 3 quarters. Great question. So for tax strategies, the goal for your business is not just to earn more. Of course, it is as a business owner, but when it comes to taxes, it's to keep more of what you earn. We work hard for that. So how can we keep more? Start off with home office. Does anybody have a home office? Do they work from home? You're spending hours, I witness it, editing. That's not an easy task. And just organizing files is not an easy task. So your home office, you want to make sure that because the law does say it can't just be you grabbing your laptop and sitting in your living room. And that's what you call a home office. No, it has to be an area in your house that is used exclusively and regularly for business. So it could be your bedroom, inside of your bedroom, if you have a corner where you have your desk established. There's no personal items on that desk. It really is strictly just used for business. That little 2x4. It could be a very small area. Now we're going to see examples because maybe it's not going to give you the best tax deduction when it comes to that space that you're using for your home office, but the real power comes when it comes to counting business miles. Because the moment that you leave your home office, you count it as a business mile. And so yes, make sure that we're establishing an area regularly and exclusively. Take a picture of it. Because what happens if he moves the following year? Like I said, audits don't come until 3 years later. How can we prove to the IRS that we had a home office established that was secluded and just used only for our home office? With a picture. The more proof we have, the better our audit results will be. So there are two methods that the IRS allows us to deduct our home office. They call it the simplified method, which is just measuring that area that you're using for your home office. You multiply it by $5, that's your home office deduction. The maximum, of course, is $1,500. That amount has not changed in years and decades. They don't go up by inflation. So that's one method. Simplified method. Measure the area and you're done. The other one, which I prefer, takes more work, but it brings a bigger deduction, is actually taking the business percentage. You multiply that by your rent, your property taxes if you have a mortgage, if you have mortgage interest, the cost of your home, what's the value of your home, the utilities, insurance, similar costs, anything to maintain your home. So yes, you're still going to measure whatever that percentage is, you multiply times all of those expenses of your home. So if we go over to Sam's example, let's say that Sam does have a dedicated corner of his bedroom as his home office. He only uses it for his work, for his side hustle, doesn't use it to do his regular 9-to-5 work. It's only for his photography side business. We measure that space, measures 20 square feet. His entire home is 2,000. So he's using 1% of his home for the business. So for the whole year, we asked Sam, what were your total expenses? He pays rent, he pays utilities, renter's insurance, $30,000 to maintain that home. $30,000 times the 1% gives him a $300 tax deduction. It looks pretty small, right? But like I said, the power comes when we count business miles. So his tax savings, if we're back to his example, he had profit at $95,000. Now we have a $300 home office deduction. We're going to try to find more deductions for Sam. One of the biggest benefits, like I'm saying, of establishing that home office is that when we start driving from our home office, it is a business mile. If we did not have a home office, if we didn't take the time to establish a space in our area as a home office, every time we drive from our home to the first photo shoot, it's called commuting miles. Commuting miles are not deductible. When we leave the last photo shoot to go back home, commuting miles again. Any miles in between, so if we have 2 or 3 photo shoots, the driving from the first photo shoot to the second, to the third, to the fourth photo shoot, those are business miles. But we are missing out on commuting miles if we have not established a home office. If we do have a home office, business miles. That is where really the tax savings comes through. Mm-hmm.
So if I have a studio, so if I commute home to studio, that doesn't count?
Correct. Okay. If you don't have a home office, but that's an excellent question. So the question was, if we have a studio, we pay rent in that studio, that's where we meet clients, that's where we do our photo shoots. So really, I don't have a home office. I don't need a home office, but we're going to need a home office. And the reason is because the drive from home, personal home, to the studio, commuting miles. You're driving into work. Let's establish a home office. How can we do that? We are going to say that in that corner of your bedroom, all you do is administrative work and management work. So you want to make sure that we have records straight, that at the studio, all you're doing is taking pictures, meeting clients. Any kind of client scheduling, any kind of bookkeeping, bank accounts for the business, we do it at home. And so the IRS does allow us to have 2 separate offices, but they require us to establish the purpose for each one. One of the business purposes is administrative and management work. So that's what you're going to establish at your home as your home office. Because, yeah, we're regularly doing that. We're scheduling appointments. We are doing administrative, looking at a bank account, seeing how much we're spending, how much is coming in. We're analyzing the financial health of our business. Office. Our studio, we don't do any of that work. We don't have time to do that work. So make sure you keep records of what you're doing at your home office and what you're doing at your studio.
The best way to keep records, I do a standard journal, but I told us.
Yes. No, a journal is perfect. Take the picture of your home office. Look at this. There's no personal belongings on this desk. This is my home office. And at my studio, I'm not doing any kind of, now there's no tracking, right? How could the IRS ever say? we are going to make sure that we are just saying administrative work gets done here. I have a memo. I've typed it up, kept it for my records. Mhm. Yes, a memo, a picture, and maybe like you're saying, even a journal. Monday through Friday, I looked on my computer, looked at the financials of my business, spent 1 hour every week, spent 2 hours every week.
That'd be the same way, like miles, like, we use our, like I use my personal vehicles also, like normal.
Yes, we're going to get into miles. Yes, excellent question about when you use your personal car for the business. Very rare for us to have two separate cars where we say this one's just for personal and this is just for business. But yeah, we're going to get into the business use of a personal vehicle. Yes.
Real quick,
Yes.
documentation.
Yes.
It just seems, sorry, for me personally,
Mhm.
it seems like there's a bit of ambiguity and flexibility in how you determine like the administrative work.
Yes.
So going back to like this idea of journaling,
Yes.
in my mind, would it make sense to like, if you have a business email, like probably
Uh-huh.
you set up like a second one, to say you could send yourself a memo to be that your administrative, so you have like a list of stuff that you're gonna do for the day that you journal. And so that way when you get home and you're working on your admin stuff through that email, you can just say like, oh, I checked this off or whatever, and that can be enough to justify the IRS.
That's perfect. Yeah, and we don't want to really just establish a business for that. It's almost like you're saying, I'm the photographer, Sam photographer, and then there's Sam manager. Yeah. Yes.
Get you scanned in?
Correct. Yes. Yes. A to-do list. Yes. And that's perfect. That's perfect. How do you, no, that's perfect. How do you keep track of your to-do that has to get done? You have to look at administrative things. Yes, either you have Notion boards, if anybody's familiar with Notion or Asana, or email yourself. Here's my to-do list to do at home. Administrative, my accountant said to keep track of one thing or another. Most definitely. Yes, like I said, I forget what I had for dinner last night. I always have to write everything down. You had a question? Uh-huh.
Two-part question?
Yes.
Sorry.
No, you're fine.
I'm brand new.
Uh-huh.
This is my first time here. So I just established my business officially in January of
Okay.
this year.
Congrats.
So is it best practice to kind of like, okay, I'm setting up, I have my insurance, I'm registered, let me go find a CPA that knows how to deal with the creative taxes, creative people for tax purposes,
Yes.
or just like a regular, how do I find, is there like a
I would advise, yeah, you have a great question, because so we just started a business. And I know money is tight when we start businesses.
Yeah.
We're really trying to invest to produce the profits. Is it a good time to start contacting a CPA so early in our career cycle so that they can advise us as we go through? I wouldn't do too much of a specialist that just focuses on creatives. That could be a little pricey. I would definitely hire somebody to work with them during the year, especially if they can do advisory and not just some of the advisory models that I've seen other tax professionals do is we're going to charge you subscription. Every month it's a certain amount, but it covers the preparation of your tax return and it covers us meeting once a quarter, even twice a year. I do that with my clients when they're early in the stage. Let's just meet twice a year to at least see how you are for the first 6 months and what can you do for the next 6 months to lower that income. But yes, and then once you get bigger, of course, I would then definitely go into, if you're not seeing that you're getting too much value from somebody that's not specialized, but I will tell you tax law applies very broadly to everyone. There's nothing that's specifically only for one industry versus another. It's just,
My second question
Yeah.
is, so I work full-time in the federal government,
Mhm.
and I did my primary job taxes already.
okay.
How does that, do I need to do my personal taxes and my business taxes together, or can they be done separate?
Yes.
as a person?
That's an excellent question. So we have a full-time job and we have our side hustle. Is it a completely separate tax return? It is not. It's part into your personal return. It's a schedule. It's just its own schedule. Report income and expenses from a business into your personal. Now, if you have met with an attorney or with a tax professional to structure you as something like we call a corporation or an S corporation, that comes with a lot more administrative fees. My clients, I tell them, we're not going to be ready for you to become an S corporation until you profit at least $80,000 a year. Once you're there, then there's going to be tax savings, but there's going to be responsibilities and there's going to be more cost to that. So really the tax savings has to make sense of how much you're going to pay for administrative fees for you to see your return on investment. Definitely start off simple, just on your own personal return.
Thank you.
Yeah.
I have a question.
Yes.
On the home office part, have you ever heard of people running into a situation where they declare a certain percentage of their home or the other way you mentioned, and that impacting their property tax due to commercial use?
Oh, okay. Excellent question. It all depends on every county. If they allow, I know in Texas, the counties that I am familiar with and my clients, I have some clients in California, when they have a home office, their counties allow to have a home office as a business. There's no impact to property taxes. They do have a limit. If you use more than 80% of your home as a business, as a home office, then they do come in and say, okay, you don't qualify for what we call, not sure if every county has it, but it's a homestead exemption that you're using it as your personal home, and it's really a commercial. And some neighborhoods don't allow it, but it has to be greater than 80% of business usage. So definitely, it's a great point. Look at your county, make sure that you are not getting into any trouble with using your office space. I doubt that it's going to be, it might come into play if it's majority, if it's more than like an 80% using it for the home office. So now using your vehicle for business purposes.
Sorry, I
No.
have to piggyback. I just
Let's
thought about,
let's do it.
Since I just established in mid-January, in one of your previous slides, you said to keep between 30 and 40 for taxing.
Yes.
How do you calculate that as a new person?
Yes,
Still trying to get, clients, et cetera. How do you
for sure.
do that math?
Number one, advice that I would say when you're establishing a side business or even you're ready to do full-time business, have a separate bank account. That's how you're going to track how much money's coming in for that business, what is leaving your bank account. And so that's going to give you a really great idea of your profit. If you look at a whole monthly bank statement, what came in, what went out, my profit, 37% set to the side, 35% set to the side. Excellent question. So when we're using our vehicle for our businesses, again, either you start small as a side hustle or you're full-time, it's not very common for your industry to have a completely separate car for a business. We're using our own personal car and putting some business miles in it. And that's the key. How can we count business miles? That is deductible, but the IRS does require a mileage log. Business miles, business meals, and business travel. That is what the IRS will always require you to substantiate, and they're going to need a receipt. Not only a receipt, but they're going to need to know the purpose. Why did you drive? Was it a photo shoot? What was your client's name? How long were you at the photo shoot? We have to have some kind of log that tracks every kind of trip. Again, I represented a client during an audit. They did not have a mileage log. They had an estimated, and that's what they did their tax return with. They had put 10,000 miles as business miles. We had no proof of a business mileage log. We had no proof of an odometer reading. Now, if you're not taking pictures of your odometer, start doing that at the end of the year so that the IRS can be satisfied of how many miles we put on our vehicle every year from January through December.
So what I do is I put my client's name and like the date, like how many miles I drove.
Yes.
Would that be good? I just need to put like how long I was at the photo shoot then?
Yes. No, you don't have to put how long you were at the photo shoot. Just say, I left home office. Remember, we have a home office. From home office to shoot location.
Okay.
And I met Sally Smith for a portrait session. And so yes, every trip. Nowadays with technology, Mile IQ is an amazing app that follows you through. It has GPS coordinates. That is a mileage log right there. And then you just have to make sure that you do your homework and either swipe one side or the other side to classify it if it was a business trip or as a personal trip.
That's what I use.
Mile IQ?
Yeah, do I have to record the odometer?
So the odometer is great because it's great just to prove how many total miles you drove for the year.
Okay.
That's just extra proof. If you don't have the odometer pictures, I wouldn't say it's completely, wrong. Just start doing it going forward. Keep your oil maintenance receipts because on there has an odometer reading.
Okay.
also. Keep those receipts in there so that we can keep track of how many miles. But we do need to know at the end of the year what was the total mileage that you put on that vehicle, and out of that, how much was business miles.
I use my IQ, and I classify, but I don't go in and type like the reasons.
Yes. Now, if you have time to put in the reason of who you met and, you know, what you met them for a photo shoot, or if you don't have time for that, then start doing it. You know, go back on your calendar. Even today, we're in April. One of these weekends when we find time, if there's ever time available, just go through your calendar and start writing down what you did, because that's exactly what the IRS wants to see.
So I have an example, and I'm not sure if you can track it or not.
Yes.
But I had a client reach out to me wanting a very specific shoot. I was not familiar with that area. So I took time out of my day to go to that area, check out location, and report back to her like, hey, this is what I found.
Yes.
Great time. I tracked my miles and what I did, and then she ghosted me. So can you, I mean, I took time out of my day.
Oh, for sure.
Business. Is that something I can track?
Yes.
And even though it went nowhere.
Did they send you a text message?
Oh, this
or
is their email.
Their email? You have proof. They asked you to go do that. A client asked you to go do photo shoot locations, right? Shoot locations.
They didn't ask me to go research it, but I was like, I'm not familiar with that, so I'll go look at it.
That is a perfect example. If you're not familiar with it, you're doing it for the business purpose. You're not going to go have a picnic there.
Yeah,
You're going to go and really scout the location, for sure. Now, I do have a photographer client who came to me and said, well, I want to go to Miami to go sightsee and see if there's photo shoot locations. They're not from Miami. And so that's a little bit stretching it too thin, because we're going to learn with travel, the main purpose has to be business travel. And it's because either we're attending something or we're meeting a client. It's just not because I want to go check out some locations. Yes, we're protecting our clients for sure.
With that, my IQ app, I also use that. When you're, like, I do real estate photography, so when I go to a home, and then like on my way to another, I stop at a store, and then go to the other one. Like, I know like from this place to that place, it's not technically for business. Should you be saying that's personal, or how do you? Like,
now, I wouldn't be so like nitpicking on that, you know. I would just say I stopped by to get office supplies. Keep your records, you know. And leave your errands, personal errands. I leave them for Saturday and Sunday. Yes, always have your story established. Yes, one last thing. We'll come back.
After a shoot, if you're going back to the home office,
yes.
Does that count too? Or?
Yes, because you have a home office. That's a business mile. If we don't have a home office, then they're called commuting miles and they're personal miles, not deductible. So important to establish a home office. I bet there's an area in your home we can establish a home office with.
Well, like road trips to Shutterfest.
Yes, a road trip, you leave your home office. That's all those miles are business miles. Yes. So you must keep a mileage log regardless of the deduction method. Remember, we talked about there's two ways you can deduct your business miles. Well, I didn't probably go through it, but here we have the standard mileage method, which is really just counting your miles on your mile log, multiplying it times 72.5% for all those miles. There's your business deduction. Or the actual method, which is a lot more record keeping. You're keeping track of all those gas receipts. You're keeping track of the maintenance. We then take the percentage of how many business miles you drove over the total miles driven on that car, that percentage, just like we did for the home office, and that's how we get our actual expense method.
Can we write off gas?
Yes, it's only if, can we write off gas? Which method are you picking? Now, once you pick the actual expense method, that's where you're going to write off gas. That's where you're going to write off the maintenance of your vehicle and the actual cost of your vehicle. Once you pick this method, you're stuck with that method forever. Standard mileage, you can pick it and then go into actual, but do know that no matter which method you are keeping track of, you have to have a mileage log.
So if I was doing the other way, 15 years, then I just gotta stick with the other way.
Yes, so if you're doing actual, you wrote off part of that car, you're going to have to stick with that vehicle to actual method unless you change into a different car later.
In your experience, is one of those better than the other, or are they?
Yes, great question. In my experience, if you're not driving, if you're starting off and you're not driving as much, do the standard mileage rate. once you start driving a lot, you're going to put some wear and tear into that car. Let's move into actual expenses. At that point, I am going to ask you, what did you buy that car for? Even if you bought it 10 years ago, that's the cost that we're going to write off. So if every year until we write it off completely. So if you bought it for $10,000 back in the day, the first year you use 90% of that vehicle for the business, that's a $9,000 write-off. But next year, we don't have that write-off anymore, right? Now we only have gas and we only have maintenance because we took a huge chunk on year one. And you had one? Yeah.
What if you have two residences? Can you establish home offices in both houses?
Can you establish two home offices if you have two separate residences? You can, and that's what happens with vacation homes. Some people have vacation homes, but we have to make sure our records are straight. That why are we not, what's the reason of having two home offices? What are we doing in one home office versus the other? Maybe the other we're only working closer to clients in that area. And that's when we have to go to our home office and do client appointments. And our first home, that's where we do more administrative work.
So is it okay to establish two home offices?
So it is okay to establish two home offices. It is a lot more riskier and you have to be very good about your record keeping of how can we establish that we're using both home offices legitimately, right? Because that's where IRS is going to be like, wait, why can't you do everything in one home office? There has to be a good purpose why we have two separate home offices. So yes, always keep your mileage log. Like I said, I have represented clients, don't have a mileage log, completely disallow 100% of the business use of our vehicle. So if we go to Sam's example, Sam, for the first year in his business, he starts using his Toyota Camry. He drove a total of 10,000 miles, and 6,000 of those were related to his business. He kept good track of his business miles. That means he used 60% of his vehicle for the business. His cost, I asked him, what was your cost when you bought that Camry? Was $40,000. For that year, he spent $5,000 in gas and $400 in maintenance. So in total, he had $45,400 of established vehicle cost, the entire cost of that vehicle. 60% of that, that's a $27,240 of a business write-off on year one. Year two, we can't take this again. This vehicle cost, we already wrote off a lot of it in year one. So this is what I tell my clients, it's a nice write-off on year one. And that's why you see some social media TikToks that talk about buy a car and write it off. Let's first make sure that we're using it. Are we using it 60%? Are we using it 100% for the business? There are some people that I've seen, and it is allowed, they buy a vehicle for the business on December 30th. Those 2 days, they have a photo event. From the dealership, they take it home to their home office. They don't use it for personal reasons. The only time they start running the engine on that vehicle, it's because they went to the photo shoot. They come back. So that maybe 10 miles that they put on this vehicle was 100% business. And they get to write off the entire cost of that vehicle on year one. Just know next year, we don't have that expense again.
What if you do a new car? Like, what if your car changes over the years?
Yes.
Like it's just a new year, new car, so it's a new. Right?
That's a great question because so what happens January 1st, let's go buy a new car and do the same thing all over again. That's where the IRS is not so fast. What you wrote off on year one, we're going to tack it on to year two. So we're not going to let you just write off vehicles left and right. Unless it got wrecked. Do we have proof that it got wrecked? We had to have a new vehicle. But yeah, there are some trade-in, we call recapture. Let me just go through, I'm almost done, and then we're going to go to Q&A. I think we have, how much do we have on our time? 20 minutes, okay. So then we have the business use of the vehicle. If we did the standard mileage for Sam, it would have only been a $4,300 write-off. So we're going to go ahead and do his biggest write-off, $27,000. So you see, we're establishing some more expenses to reduce that profit. And we will give you a PDF of the presentation. We'll make sure to send that over to you. Huh? And the video, yes. We're recording the video, so for sure.
Does it work if you're not staying at Union Station? Like you're still going to send it to us?
Yeah.
Okay.
Yeah, how are we going to send it?
QR code, there's a QR code at the end.
Oh, okay, perfect. Yes. Of course, for the mileage log, we're tracking, Mile IQ would do this. It's going to track your date, your destination. But this business purpose, you have to go in and say what it was. Who did you meet? What client did you meet? And so we need to make sure we keep track of beginning and ending odometer readings. And don't wait until tax season to recreate it. Now, I will say if you haven't recreated it, go ahead and do that. But going forward, always make sure that we're doing it. The IRS requires this contemporaneously, which means when it happens, that's when you're keeping track of it. Not during an audit, especially. Hiring your kids. Does anybody have kids here? This is an actual picture of my daughter. See, we hire her. Great light assistant. They're capable at that age to hold things, to help you with changing out batteries. So the pay has to be reasonable for your kids. We can't say for a light assistant, we're going to pay you $10,000 for one photo shoot, right? We have to be reasonable about what we're paying. And again, record keeping. We need to have a job description. Now with AI, go with AI and say, hey, I'm hiring my son, my daughter, to be a light assistant. Write me a job description for a 10-year-old. We're going to need a job description on file, time records, payroll records, proof of payment, right? We're not going to wait until the end of the year to write them a check. And we're going to have to issue them a Form W-2. Now, will my child have to pay income taxes? It all depends how much I do pay them for the end of the year.
Some kids are.
Hello, Mr. George.
Yes, I'm going to go over that.
For the new guy,
This is our son.
$20? No, too much money.
We did a reel and we did kill it, but yeah. I will tell you, hiring kids is a little frustrating. Sometimes I fire them and then hire them again because of this. But yes, find things that they can do. Organizing your gear when you get back from a photo shoot. Of course, be very careful with handling gear, right? Your lenses especially. Labeling files. Here, our son came to a quinceañera with us. And all he had to do is next to the tripod, make sure it's always the red light, it's recording. That's all we need you to do. And he comes along. And we pay him for that. But yes, paying a child just to move your income, because remember, you might be at a higher tax bracket than your kids. If we're doing it just to move our income and we don't have a job description, we don't have legitimate work for them, we're not paying them legitimate pay, then that's tax fraud. And we do not want to get into that. Now, when it comes to hiring kids, if you're a sole proprietor, does anybody know if you are a sole proprietor? Yes, most of us start as a sole proprietor. That means we haven't established a corporation. We haven't established an S corporation. When you are a sole proprietor, the best thing you can do is hire those kids. They have to be your own kids. It can't be a niece or a nephew. And so when you pay them, you don't have to pay any payroll tax. If you were to hire a niece, a nephew, or a stranger, as an employer, remember how I said the employers pay half of the self-employment tax, of the payroll tax, which is half of Social Security, half of Medicare. When it's in your own child under the age of 18, you don't have to pay any payroll tax. Your son or daughter doesn't have to pay any tax of Social Security or Medicare tax, but they have to be under 18. Once they're over 18, you can still hire them, but now you have to pay the payroll tax. But hey, you're moving your income down to your kids. And if they have any kind of extracurricular activities that you're paying for, have them pay it from their paycheck. Because when you pay for it, it's a personal expense. We can't take an expense. We're moving our income to a lower tax bracket, and we're having them pay for what would have been personal expenses to us. And we're shifting that income from personal expense down as a wage expense. Mm-hmm.
How do you pay them? Do they have their own bank account?
Yes.
Okay, so you have to set up, can it be a joint one for like all three of my children or no?
No, it's better to keep them separate. And I know, like I bank with Capital One, it's free accounts for minors. So I do have a bank account established for my daughter and one for my son. If they come to work for us, I have them do a timesheet, and I like for them to write it so it looks like child's writing, handwriting. So they turn in their timesheet at the hour, how much I'm paying them for the hour, and I transfer over that money. I don't really write them a check. Nowadays, I don't even order checks anymore from the bank. Yeah, so the proof of that transaction of me transferring them, let's say it was $600 for the day. My proof is the timesheet that they filled out, that what time they started working, what time did they end working. I have a job description that I had established a year ago. It's
And that is just like your job description is on like
on a Word document, yeah, on a Word document. And I did have them sign it, so I did do a PDF. I had them sign it, and I said they're like my employee, and I'm their employer. So it's a job contract. And then the timesheet that they turn in, it's really just, I just did an Excel spreadsheet that says date, time in, time out. You know, time clocked in, time clocked out, and what they did, yes. And light assistant at Sally Smith's wedding. And so
paper they write out, what they did is your proof if you get audited.
yes.
Outside of the Excel sheet.
Correct. Yes, so the piece that, well, I print out the Excel spreadsheet. I have like a template. I print it out, I have a bunch of them, and that's their time card. And at the end, I do the math. Okay, it was 10 hours at $15 an hour. The math comes out. That's how much I transfer over. Because when the IRS says, why did you transfer them $1,200 or $800? How did you figure this amount out? Oh, here's your time card. Yes.
And this really only beneficial to do when they're under 18.
When they're under 18, because you save on payroll taxes, on that 15.3% of taxes. Yes, they don't have to pay it, you don't have to pay it. And they won't even pay, say they might not even have to pay federal income taxes. Because what happens with federal income taxes, yes, they're earning money, but we know that we have a standard deduction, which means everyone is allowed to deduct their income by a certain amount. Since my kids are single, it's a $15,000 deduction. So if I paid them $10,000 minus $15,000 wipes out their income, no tax due. I still file a return for them to prove to the IRS, hey, we received the W-2, but here it is, no tax income to them. There was no payroll tax, no Social Security, no Medicare tax. For sure, establish some kind of job description for them and a duty that they can do for you.
So for my two older ones, I pay them for like doing actual things, but I have a 3-year-old, and so I pay her for modeling. Is that technically pushing it? Or?
Yes, that is pushing it because and this is because of my audit experience, the auditors will come and say, explain to me how this model is giving you profit. Like, how are you generating profit by her modeling? Oh, because she's on my business cards. Do you think, is it clients that are coming to you because you have a child on your business card? Now, if you were like a child photographer, that's a lot more believable. Yes, I would definitely. But if it was just if the IRS looks at the social media pages, because they do, and they only see wedding and kind of those bigger events, senior pictures, where's your child photography expertise?
Family, so.
Yeah, so if you do family, so if you're paying, and when you do modeling, definitely look into what would another model, what would you have paid a child model? What do they get paid? Yes. So have your research, you print it out. This is how I established their hourly rate.
Okay.
Did you have a question?
I kind of did was touching. I just had that because, okay, so let me just quickly answer.
Yeah.
My kid and I, we like go over stories, and sometimes he wants to write his own story, like what your kids would.
Yeah.
So I told him, I was like, okay, great, we'll make your own kids book. My idea for the things, because I don't want his face in it necessarily, but like having his hand or everything like that, is that still counted as talent? Could I contract him as talent?
Yeah. So.
Page has something, like a kid playing with a toy or something like
Yeah.
that, and then obviously I'll write the book.
Yeah, so if we're writing a children's book and we need pictures of an actual child, you would have paid a stranger's child that amount. Yes. Yes. Yeah, and I mean, what better than hiring your own kids? Yeah. I don't know about that. Sometimes I have to fire mine and then I'll hire them again. These, I know. But yes, definitely keep track of, you would have paid somebody else's kid $10 an hour or $15 an hour, for sure.
Just as long as it's like ordinary.
Yes, ordinary, necessary, and are we making a profit, right? You always want to establish that this is not a hobby. We're not writing a book for fun. We actually intend to make a profit with our book. Yeah.
On that same thing, if I have a family that comes in and we kind of like do a trade where like I'm photographing them to be my models and they get the pictures for free, can I write off the value of what those pictures would have cost and no money exchanges hands?
No, so that's an excellent question. And this happens when we're starting our business. We do a lot of bartering. And I did it when I started my tax business. I'll prepare a tax return for free, take my family pictures for free. And it really is exchanging services. The technical rule, you are supposed to each claim the income that you would have paid, that you would have received, that I would have received for the tax preparation, And then I have an expense of what I would have paid for a family photo shoot related to my business, if that's something that I was using for my business cards. When you're trading services like that, or where you're donating services, because sometimes you can donate your services, that is not deductible. We can't deduct any of our time that we're contributing to a charitable donation or for a client.
So I hired someone to do my taxes this year. I got my LLC in June.
Yes.
And when I went through on the charity work, because I volunteer at a shelter,
Yes.
I take pictures and I use that on my website.
Yes.
She said, what would you have paid for that project? Or what would you have charged for that project? And then she put that as a cash income. Is that not right?
I wouldn't have done it at all, no.
Okay.
Because now you're paying tax on money that you never received. I mean, or income that you never received.
Owing anything. I've spent more than I've had come in.
Okay.
So it's a wash.
Yes.
But, so don't count that.
Yes, I wouldn't count it. And be careful with if tax preparers want to inflate your income, because there's something that's called earned income credit, which you can get money back from the IRS if you have enough income and earned income. So if you're working on your own personal return, on your own personal business as a business owner, and there's that magic number that I've seen a lot of preparers do fraudulently, they inflate your income to be at that sweet spot to get money back. And that is very punishable by the IRS. For 10 years, they won't let you claim that income credit anymore, even if you do later qualify for it. Preparers get penalties. It's just, at the end, just understand that when you sign a return, even if you hired a professional to prepare your return, you are responsible 110% for your own return. So make sure that you're asking the questions to whoever's helping you professionally prepare that return, that you understand how they got to the number that they have. Because at the end, we're all responsible. And I can tell you a story later how I got audited when I was 18 years old. And my first excuse was, I paid somebody to prepare this. They said, and that auditor taught me a lesson. We will go after that preparer separately, but right now, you are the one who is responsible 110% for your return. Not only did I have to pay my refund back, plus penalties and interest, and I learned a lot. And that's what drove me into the tax career. But yes.
So kind of piggybacking off of her experience, so to build my portfolio, I offered 2 free sessions, but in return I've gotten marketing from that for like comedy shows. So how do I capture that tax-wise if I'm technically donating but still earning marketing from that in return?
So I would definitely, your business miles, you drove there. Maybe you sat with one of them to have a business meal. You talked about plans, that's deductible. But your actual hourly rate of what you would have charged them for this, you can't include that as a deduction or include that as income because you never received anything.
So just a traveling.
But for sure, anything that you spent out of your own pocket to generate that, and it's really not a charitable, don't say it's charitable, right? It's for the intent of marketing yourself. Yeah, we've done that where you have to go and get your name known.
Okay. So back.
Yes.
So basically, I could deduct my miles.
Yes.
My props that I used for that, because I do show it on my socials. So
Correct.
I am trying to get clients.
Yes, and let's change our mindset of we're doing it for a good cause.
Yeah. Well,
no, we're changing our mindset. No, it happens to be a charity event, but I am in there with the motive of getting more clients and using these pictures to promote myself. Yes.
So it includes, like, I do mine, like, I do with Kids Foundation.
Yes.
Where they don't have a photographer, so I'll show up to
Yes.
the gymnastics and stuff. Photos of them.
Yeah.
As services, I can't charge for that.
Correct.
But I can charge like the miles.
Yes.
And then anything.
And not because you're donating your time, but because you do it with the intent of networking. You're going to meet somebody, hopefully. They're going to see how amazing a photographer you are, and that's our intent. We're marketing ourselves. So yes, your business miles, meals, if you do sit with one of them and organize the event, your cost of your meal is deductible.
So everything else kind of around that.
Yes.
Service.
What you had to spend to get there.
Okay.
But yeah, your actual time is not deductible. Yeah.
So for the donating, taking photos, like I do photos for my church a lot.
Yes.
And what they have me do is I send them an invoice for what I would normally do, and then they send me like a donation, like this is what I donated to the church. Is that
Oh, okay, so it's almost like you did charge income, right? You charge them something, but do they actually pay you for that service?
They don't, no, they counted it as, it was like an in-kind donation.
Yeah, in-kind donation, so almost like, which would have been as if they would have given you money and you turned around and gave it back to them.
Yeah.
So in that case, back to your scenario, then that would qualify. You're going to claim it as income, and now you're claiming a donation, a charitable donation, because now you have, and that's the thing about charitable donations, you need to have a receipt from the organization that says, you know, this is how much you donated to us.
But then that number should have also been
In your income, correct.
Does that same scenario work? Like, I donate gift certificates to our local cancer assistance fundraising event.
Yes.
And so people will bid on that, like my gift certificates.
Yes.
And win, and then they'll reach back out to me and I'll give a service. So like, actual, like, there's a value on my gift certificate that says, you know, the value is $120
Yes.
or whatever. So is that still then?
Then that's the same thing as, did you get a receipt from them saying, thank you for donating $125 worth of services? If you did, then I would claim the income, and then you have now a charitable donation. If they don't give you anything and it's really just you, you know, out of the goodness of your heart, giving them $125 worth of your services, we don't claim any of that on your tax return. What we will do is claim your business miles. Your business miles, any kind of expenses, because yes, you're doing it for a good cause, but at the end, we're business owners. We're trying to get some more business out of this, somehow networking. Yes.
I think I have a text maybe that says thanks for donating or whatever.
Yeah, so if they did give you a value, think about it the same thing as if they would have given you cash and you turned around and donated that. So it's income, donation. Yeah. So if we go to Sam, he hires his son. He pays him $10,000 of reasonable wages for the work performed. And because Sam is under the standard deduction for this year is close to $16,000. His son is not going to owe any federal income tax on that income that he received of the $10,000. So the great thing is now Sam has a $10,000 of a wage expense. We keep lowering his profit. We're shifting some of that income down to his son. Business travel. So what is the rule? The rule is that you have to travel away from they consider this tax home. It's not the same thing as home office. The tax home is the place, the vicinity where you conduct your business. Now, if you are a traveling photographer, which I forgot who you follow, Peter McKinnon, he goes to several locations, and that's his whole YouTube video. He's going to several locations to take pictures. He doesn't really have a tax home. His tax home is with him wherever he travels to. So his travel expenses are zero. Now, are there other ways that he's deducting that? Maybe business mileage. He's away from a home office. But just know, as long as you have the city that you're in, that's where you conduct your business. That's where clients hire you. They're not hiring in different places. You really have established yourself in Dallas, Texas, some kind of city. As long as we're traveling away from home, and our main purpose of this travel is business related. That's what we care about. And that you're spending majority of those days while away from your home for business purposes, then it counts as a deductible business expense. We can deduct our travel, airfare, or if you're driving, you can deduct your lodging, you can deduct your meals, even if you're eating by yourself. And that's very different. Business meals is if you're meeting with someone and you're talking business. But when you're on travel, business meals, you do not have to meet with anyone, just you and yourself. You're eating your lunch, you're eating your breakfast, you're drinking coffee at the airport. Keep your receipts. All of that are considered meals deductible for travel purposes. Now we're talking about keep your records. Again, this is one of the most highly audited areas, as long as we have our proof. Where did you go? Here in St. Louis. You traveled to St. Louis. Here's a receipt of my entrance, my ticket entrance to Shutterfest 2026. That's the proof of what I was doing, what business did I have in St. Louis. Keep track of your hotel receipts. Every type of receipt. You're paying for valet, that's deductible as well. You're giving out tips to the valet, that's deductible as well. Make sure you're keeping a receipt. There was one valet that I had to pay through Zelle because I rarely carry cash, but I just took a screenshot of my Zelle transfer, and in the reason, I did say valet tip. And I had a valet ticket too that I took a picture of. Domestic travel. So like I said, your primary reason has to be business. This example, we have 5 business days versus 4 personal days. 5 business days is greater than 4 personal days. This travel is business deductible, because more than 50% of the time that we were at that city, at that location, was dedicated to business travel. Do you know that your travel day counts as a business day? Because especially if the conference is starting early in the morning, it's not logistically okay for you to get there that morning. You will probably want to get there the night before to settle in and make it in time for that class in the morning. So the day that you're traveling, it's a business day. Count that as a business day. So in Sam's example, right, he's always wanted to visit St. Louis, Missouri. But then he found out that Shutterfest is hosting at St. Louis. I always tell my clients, if there's a city that you want to visit, try to find something going on for your business in that city. And that's the date that you're going to go visit that city. Because we want it to be the personal motive of why we're traveling was because of that business conference, was because maybe a client told us that we had a photo shoot in Las Vegas. They wanted a photo shoot in Las Vegas. We visited Las Vegas in January. Not much of a time to travel to Las Vegas, but because the motive was business related. So Sam, we say he spends Monday traveling for business. Tuesday through Thursday, that's 3 days of business days for the conference. Friday's a personal day. He's going to go sightseeing, visit the aquarium. And Saturday is when he's going to travel back. That's his business day. So when we count the days, it's 5 business days in total and 1 personal day, which is Friday. Now, the expenses that he's spending, his meals on Friday, on his personal day, that's not deductible. The admission to the aquarium, that's not going to be deductible. Anything personal, attractions are not deductible. But hey, you just got your business to pay for your trip to go visit a city, and you kind of blended in some business, some personal time. As long as the majority of the time that we're at that city is due to business. You don't have to have a personal day, yeah. So like this Friday, he decided to do a personal day, but Friday, is there another class? Or are there kind of photo shoots, off the books photo shoots that you guys are doing? That's a business day. But yeah, it's a way, it's a strategy to kind of go visit a city that you really want to and bring your family along, especially if you have 1 room, you're doing 1 room with 2 beds. The IRS is not going to come and say, well, only 1/4 of that room is deductible. You're paying for your lodging anyway. So yes, we bring the family along. Any expenses the family is doing, those are not deductible unless they're coming into the conferences. If they're old enough and we're paying for their ticket, that's going to be deductible, right? There are employees, especially if it's your child, that's your employee.
I saw a preteen with a camera walking earlier.
Did you? Yeah. They're establishing that strategy, teaching them young, right? So this is just giving you a little bit more of, because the primary reason for the travel was business, Sam's trip qualifies as a business trip. He spent in total $399 on the conference ticket, $400 on airfare, $800 in lodging, $500 on meals. In total, $2,000 of a business travel expense. We keep lowering his profit. We have now another deduction there. Let's finish off with retirement savings. We have, of course, we're never too young to start saving for retirement. So now as a business owner, if you're not having an employer that you're working for that is offering a 401k, start saving for retirement, because we do have several retirement options that can give you a tax deduction today. Now we're only kicking the can down the road, because we get a deduction today, that income is going to grow and grow based on the stock market, whatever you have it invested in. When you take it out, that's when you pay the tax on what you put in and also on the growth of it. That's what we call these type of retirement accounts. So you see, if you establish what's called a traditional IRA, an individual retirement account, you can put in up to $7,500 for 2026. You'll receive a deduction today. That's going to lower your income, which is going to lower your federal tax that's going to be due on your return. A SEP IRA, those are for the business owners. You can do either 25% of the profit that you're generating for your business or up to $72,000. That's a $72,000 tax deduction. The simple IRA, it's a $17,000 limit. Now these limits do go up for inflation year after year, but you get to reduce your income by this amount. Of course, it's a benefit today when we take the money out, what we put in and what we took a deduction for, we're gonna have to pay income tax, plus of course the gains on that investment income that went in there. I prefer the Roth IRA, especially if you are in a lower income tax bracket. That means you can put up to $7,500 into a retirement account. There's no tax benefit, there's no tax deduction today. But the beauty about a Roth IRA is that it grows tax-free. So when you take that money out at retirement, not only the $7,500 is tax-free, but all of the growth. Can you imagine 5 years worth of gains and how much this is growing? You're never going to pay income tax on that. So that's the beauty about the Roth. And I really like that. Especially I like combining hiring my child. Now they have earned income because I gave them a W-2. We're going to open a Roth for them now. Because what they're paying zero in tax, remember. I'm paying them under the standard deduction of $16,000. They have money of $16,000. Let's put in $7,500. No tax benefit. We didn't need it. You didn't pay income tax anyway, and it's going to grow tax-free for them.
Do they have to be a certain age to put in a Roth?
Do they have to be a certain? No. The rule is that they have to have earned income. So yes, they're working for that money. Yes.
They have to earn a certain amount?
Well, the most.
At least
Yes. For the right, if they earned less, if for the whole year, maybe I fired them, I got tired, and I only paid them $4,000. Let's put in $4,000, whatever I paid for that they received in income. So if we go into Sam's retirement, oh yes,
Question, you mentioned earlier about the banking.
yes, a separate bank account for your business, yes,
So is it better, because I've looked at banking for business purposes.
yes,
But the maintenance fee are ridiculous.
I know.
Is it better to just open up a personal account and label it
yes.
business or whatever?
Very good question, especially if you're just starting out. As long as we have another separate bank account that's only what we're establishing for business, it's to keep you sane. Because at the end of the year, if you only have one bank account and you're mixing your personal expenses with your business expenses, it's going to be a headache to go in and try to sort through all of those transactions. So yes, just keep your own, even though it's a personal bank account, keep it there. I hate paying bank fees. I found Comerica is our bank that we bank with, and they don't charge us a banking fee for that maintenance fee for our business account. Yes, but so Sam's retirement, let's say that remember we were at $95,000 of a profit. We're going to go ahead and put $17,000 into his retirement account. So if we remember where we were with Sam at the very beginning, that's how much he had to save, $35,000 for taxes. With all of these expenses that we were able to go through home office, now we have $10,000 of a tax bill. That's about $24,000 of tax savings. And I know $17,000 of that is at least what we were able to contribute into a retirement account. So instead of sending the IRS a check of $35,000, it's only going to be $10,000, and that savings, it's amazing. $24,000 on this example alone. So it's just finding and being aware of what expenses we can do, how to establish a home office, how to make sure that we're hiring the kids and having them open up a Roth IRA. I'm going to go really quickly through true or false, some of the most common that I've seen out there on social media. You must have an LLC to write off your business expenses. Very false, yes, very false. The LLC is only for the purposes of protecting you legally. If somebody were to sue you, they can't come after your business, your personal bank account, your personal home, nothing of your personal assets. That's the only purpose, legal reasons.
Which is the other reason why I have a separate bank account.
Yeah, so if you have a separate bank account, exactly. So we had the example, right? If we open up our own personal bank account and we mix personal and business expenses, that completely tears apart your LLC protection. So make sure if you have an LLC, have its own bank account, don't mix and mingle. But that's the only reason for an LLC. No tax benefit at all. Just make sure that we know that, don't listen to those, you need an LLC to write everything off. As long as we know it's an ordinary, necessary, and reasonable business expense. You can write off professional clothes that you wear to client events. Now, this is very common, right? You get hired for a wedding, you don't want to show up in just jeans. So can you write off a personal clothing, a business suit? Let's say that you never use suits ever. And that you
need to have a logo or something?
So it is very false, because the law does say anything that can be used personally, even if you don't use it personally, if you're never photographed or witnessed in that suit other than in client events, it is not deductible, just for the reason that it could be personal use. If you do have a logo, make sure that your logo is visible. I would do that too. I would write that off. If it's a blazer and has your logo visible, I did have a client say, well, can I put my logo in the inside? No. Let's really try to establish a business reason for our blazer that we're going to write off.
That's the theme of it. Like I do red fair weddings. I just write off red, all my red fair clothes specifically for those events.
What kind of
Renaissance fair?
Oh, Renaissance. That's a costume, right? Can you personally use that? Probably. I mean, you could, but it's not common for you to go to Walmart in your costume. Yes. So that's a very, very great question. I would write that off 100%. Mm-hmm. You can write off your car just by adding your logo to it. We learned this is false. What do we need? Miles. Mileage log is what's going to write off that car. I've had clients come and say, well, my logo's on it, or I'm completely going to cover my car in my logo. It doesn't matter. At the end, what matters for vehicles is your business mileage proof.
Maybe just the cost of the logo, right? That's like you
Yeah, of course. If you put a sticker, the cost for that sticker, it's going to be deductible. Doesn't make your entire car deductible. It all depends on how many miles you put in that are business related. And then you put your family on your board of directors to write off family vacations. Most definitely not true. Remember, I know I've seen that TikTok, and it's a board of directors. First of all, you need to have a corporation, and you have to pay your board of directors. So now your family's going to start claiming some income, and you need to have documented why was it Disney that you had to go. You know, so it's
To take
yeah.
photos, of course. Advertisements of my models.
Yes. So we just got to make sure we're documenting the reasons. I'm telling you, I've seen this through auditors on asking these exact same questions. But yes, a family vacation does not become a business deduction just because they're involved in the business. We need to make sure we have a purpose of why they're involved in the business, what was their purpose, and why are we in that specific city. So just key takeaways, right? The most important, we're changing our mindset. We're always running a business no matter what. Yes, we might be creating some pictures at a charity event, but we're there for a reason of networking, the reason to bring in some more business. Business travel is deductible when it qualifies. The main purpose has to have been business related. Set aside 25 to 35% of your profit from day one, making sure that we don't get surprises on April 15 of how much we have to send in to the IRS. It's always painful. Home office and mileage, the most powerful tool that you can establish. Hiring your kids, again, we're shifting down our income down to a lower tax bracket or maybe zero tax bracket, and then let's establish a retirement account for them. Let's establish a retirement account for ourselves. We never too young, never too late to start saving for our retirement. You can either choose to get the deduction today because maybe we are at a high income tax bracket. Let's take the deduction, let's contribute some money into a retirement account. When we take that money out, we might be at a lower income tax bracket. Maybe we're scaling back. And with that, thank you very much for coming through with your tax education. Scan that, and that's so you can follow me on Instagram.